Oh man, in this video, I'm going to share with you an important on-chain metric which is indicating that the bottom is in. A huge major shift on the on-chain metrics which we can now tie together with the shift we've seen in macroeconomic data to start formulating an idea of whether the worst is over and can we start to bring that risk on and confidence back into the markets. Bitcoin having a flat day here at 21,000. Remarkably, that's really positive considering we've had the official filing of bankruptcy by Genesis, one of the biggest players in the crypto space. Obviously, the market had widely priced this in since November after the FTX collapse. We know that Genesis suffered at the hands of not only the FTX collapse, but also the 3 Arrows Capital collapse. So the FTX thing was the final straw that broke the camel's back. They ran into two major collapses through 2022, and now they've officially filed for bankruptcy. They're saying that they've got creditors between 1 billion and 10 billion in liabilities, and they've got assets and in that same range. Remember, you have to fill in this form when you file for bankruptcy, and they tick the box to say we've got 1 to 10 billion in terms of liabilities, but we've also got 1 to 10 billion in assets. They owe over $3.5 billion to its top 50 creditors, which by the way include the likes of Gemini, which you can see there, Cumberland, Mirana, which has a slight involvement with BYBIT, although BYBIT have come out to clarify that they had no customer funds in there whatsoever. It's completely unrelated. They were just investing some of BYBIT's own funds for them, and a few others such as Moon Alpha Finance and Vanex New Finance Income Fund as well. So that's now going to play out. They feel like they have enough money, but look guys, they feel they have enough money to cover even the unsecured creditors who normally don't get a look in. But we've heard this all before, right? Until the liquidators come in, they take handsome salaries for doing absolutely nothing. It's the only one person wins. Liquidators and the lawyers, they win in every one of these cases. So not a great start to 2023 in terms of bankruptcies. Crypto's claimed its first victim, although we could really just say that they kind of staggered along into 2023. They could have easily been a victim in 2022. The market is shrugging this off. You can see Fear Ingredients is sitting at 51, and a lot of that comes around the fact that we are starting to see important shifts in the market. So what I'm sharing now on screen is known as the MVRV score. You guys have seen this covered up before when we do our on-chain deep dives. If you like the on-chain deep dives, comment below you love on-chain, because it's difficult for me to know if you guys want technical, if you want fundamental, if you want macro, you want on-chain. I try to blend it in as best as possible. But if you want a deeper dive, or you feel like we've not had an on-chain video in a while, make sure you let me know. Engage in the community, jump into our Telegram, be in Twitter. I'm on those platforms every day, so make sure you're in there communicating with this community. Now, what you can see, what this tells you is what percentage of the market is sitting with unrealized losses, which in other words means that the market value is not the same as your realized value. Okay, so it looks at the difference in your realized cap and your market cap. I'm going to simplify this. In other words, when you get above zero, which is the line where that green line is right there at the bottom, see that green area? The top of that green area is sitting around that zero mark. When you get above zero, finally you are no longer in unrealized losses. In other words, the Bitcoin you hold is now worth more than when you bought it. So you're in a profit. In the green area, you're in a loss. And if you look historically, why were we monitoring this indicator? Well, if you look at the 2012 period, you look at this period here, around 2015, you look at obviously this bear market in 2019 as well, it always tied in, even with the pandemic there in March 2020, it always ties in with the bottoms in the Bitcoin price, which is the black line above. So this was something we were monitoring very carefully. We formed our low there, which is what you can see, and now we're starting to try to climb back out. And this is very interesting because, you know, when you normally see that we were in the bottom here, we do tend to climb out quite nicely. So you form a bottom and you climb out steadily. So by all means, I'm not saying we're suddenly going to start springing back out, but it is a good sign that we formulated that bottom and now we are spiking nicely here. Now, from a psychological perspective, it's really positive. It means you're coming out of this capitulation point, because the people who were going to sell, the hodlers who were going to sell, largely would have sold by now. Now things are starting to improve. Bitcoin's at 21,000. There's a huge difference between Bitcoin at 21,000 and 15,500. That's a significant percentage move, and therefore a lot of people will be feeling far less panic. They'll be feeling a lot more confident in their portfolio. But that's not the only one, guys. There are other on-chain metrics, such as this one, which I want to share with you, and this is known as the net unrealized profit and loss, or you may hear me say NUPL, which is what a lot of people say. Again, looking at the unrealized profit, and again, I want you to look at the blue line, guys. Look at that blue line. It's spiking out of the capitulation phase and now into the hope/fear stage. So by all means, are we not saying that suddenly we're out of it? We're suddenly out of the trouble here, but you can see we are indeed trying to get out of this mess, and it is the first step. And that ties in with what I was sharing with you on the technical analysis. We're going to jump into the charts as well, but we are seeing a nice relief rally, but we can't get ahead of ourselves. Weekly time frame is still owned strongly by the bears. So we got to keep that into perspective, and these on-chain metrics are corroborating that exact idea. Let's look at what the macro is saying. The macro is saying the same as well. We're expecting some sort of a recession. We still feel like there's going to be pain ahead. We're not sure, but one thing is for sure. Macro data is starting to trend in the right direction. What people are unsure about is whether Jerome Powell is going to nuke us and keep rates hiked for too long. So they're feeling positive about the CPI, they're feeling positive about the employment data, they just want to see whether Jerome Powell takes his foot off the gas and gives us that pause at some point in the next 2 or 3 meetings. That is what the fear is right now. They do not want to be thrown into a recession. That's not it, guys. There's also the Puell multiple, and again, the Puell multiple is another one of these on-chain indicators which gives you a clue. If you look at every time you've gone into this green zone here, it's characterized by the bottom of bear markets. And you can see here, again, that same 2015 period, the same 2018, 2019 bear, the same pandemic in March 2020. And now, obviously in 2022, we climbed in there as well. But what can you see? We've climbed out of the green zone now. We've climbed out of the green zone, and we're starting to look like that was the bottom. So a lot of things are starting to tie together now and show us an improving picture, and more importantly, a shift. And if we take a look at the Bitcoin price, let's jump here into the hourly. What are we seeing here? Well, we fell out of the channel. We were in a bullish continuation pattern, right? The orange lines. We fell out of that pattern because of the drama that the DOJ posed. Now, it wasn't just the DOJ thing. Remember, we covered off at the time. It's also the market have this underlying worry about an impending recession. They don't quite trust Jerome Powell. But here's my take. Jerome Powell knows what he's doing. If Jerome Powell comes out right now and says, guys, we've got this under control, inflation's coming down, guess what happens? Everybody gets excited, people start spending again, they buy their stocks and shares again, people are feeling really, prosperous at the moment again, and suddenly inflation returns with vengeance. Jerome Powell needs to keep his foot on the neck of the markets. He needs to make sure he squeezes it all out, and the markets will automatically start pricing it in through that time. He cannot come out and say, oh, the battle is won, and start declaring victory. Inflation will spike back up again. So he's got to play the bad cop, and he knows his role. He's very experienced, and he's got to do that. So I'm backing that. I think that's fine. I'd hate for him to come out and say, oh, the job is done. The Fed officials have to come out and say, we got more work to do. Let's crack on. Now, we fell out from that pattern. We then monitored this W pattern. Okay, you can see there where I've drawn this W pattern, and I shared that on Twitter and the Telegram. If you're not in those groups, Twitter at RealIjaz1. Telegram, link is in the description. Make sure you're joined on those platforms so you do not miss anything. Very, very important. Now you're starting to see the RSI break from the trend. We're out of this bearish divergence trend. So this is a good sign, right? Can we get ready for our next move? The other thing we're monitoring is a higher low. If we bring out our brush, you can see here, we are creating this, which is our higher lows. So take this low here, and we want to create a lower low, and we can start trending upwards. If none of this makes sense to you, ijaz.uk/TA. Free TA course. A lot of people are complaining, oh, it's not free. Guys, it's on Skillshare. It's hosted on Skillshare. By the way, I have a subscription to Skillshare. I think it's great. I watch a lot of courses there because YouTube is not good for courses. If you guys are serious about learning anything, sign up to Skillshare. But the first 30 days are free. If you guys are broke, like when I was in my broke times, there are ways around it that I know what people are doing, right? They will sign up with their friend's account, watch it again. They'll sign up with their brother's account, they'll watch it again. You can do that. So go set up those accounts and watch for it. Personally, if you can afford it and you've got any decent money in crypto, get yourself signed up. Watch courses. I'm going to be posting a lot of courses on there. They'll all be for free, so you can all watch it using the free sign-up option that Skillshare gives you. Link is in the description. And you can learn it. I'm going to put on-chain. I'm going to do a course on on-chain. I'm going to do fundamentals. And if you want to say in which one I do first, jump into the Discord and you can have your say. So Bitcoin trending nicely in this direction. A few other things I want to share with you, which is, where is our support? Where is our support, and what are we looking at from here? Few things. Where we're sitting right now is that 20,000 level. Let me jump back into this chart. Look at that blue line. That blue line is the peak of the previous bull market high back in December 2017. We're holding it very nicely. Despite the Genesis bankruptcy, despite the DOJ fears, we held well here. And we're trying to bounce from here and get ready for a nicer, big continuation move, okay? Because remember, you want that continuation move up towards the 24,000. That's where our price target was telling us. So can we reset, ignore the DOJ FUD, and start working our way back to the upside? If we fail to the downside, I'm looking for support at key levels. And the first one is this 20,000 mark. and then the top of the channel at 18,700. Now, why are those levels interesting? Let me bring up the 4-hourly chart, and you can see clearer. This is our channel. Bottom of the channel, green line, 18,700. Top of the channel, 22,000. This is a difficult level to break. It's not easy to break past 22,000 here on the top of our channel. If we need to consolidate, come here at 20, bounce, and try again. Or if it wants a more consolidation, and remember, why do we want consolidation? From a technical perspective, let's just take a moment. Why do we want consolidation? Well, from here up to here, we took no rest. We had a sprint all the way up there. Now, the problem with that is when you have a big move to the upside without coming and pulling back, you've not built any scaffolding. I want to see this market build some scaffolding now. Whether it's at 20, I don't mind. That's an ideal situation. Even if it wants to come to the bottom of the channel, go and retest it. If you have confidence in our next big move, I'm not in a rush. Go retest 18,700. Show that you own that level. Tell the bears, do not mess with me. 18,700 is locked in. Now I'm going to bounce and I'm going to break through 22. Take it stage by stage. I much prefer that. It's more sustainable. Because otherwise, if you get big moves like this, there's always the fear you can give it all the way back up again. So none of this, like if you think of, none of this is banked, right? It's not banked all the way from the bottom here, from 16,200 all the way up. We've not banked any of this. We've got to, I don't mind coming down and seeing that. If I bring out the EMA ribbon, you'll also see some interesting levels as well, which is on our 4-hourly, look where we are right now. It's no coincidence that we're holding our EMA ribbon. Again, I don't mind if we need to come down to 20,000, because if I go up to the daily chart, again, zooming out, going up a couple of time frames, at 20,000, you're nowhere near your daily EMA ribbon. At 18,700, the bottom of the channel, then you're testing your daily EMA ribbon. Again, no issues with that. When you've had a big extended move, come back to your EMA ribbon, test it, prove that you can hold it, and then get ready for a nice, bigger, more sustained move to the upside. Let's also check in on our best friend, which is the dollar index. We have to be checked in onto the dollar index. And by the way, guys, don't forget to smash up likes, guys. If you appreciate these updates, regardless of where I am, I'll be back on my desk tomorrow, but make sure you smash up likes if you appreciate these timely updates. Then you can see here, dollar index continues. It's having a green day today, but nobody cares. It's a long downward trend here on the daily chart. We own the daily chart right now. Very clear. It tried to run into its EMA ribbon and we rejected it. More importantly, even the weekly chart is starting to give me a much more confidence, right? It's not crazy. I'm not getting ahead of myself, but we are, closing weeks now well below the EMA ribbon. What I want to see now is exactly what you're starting to see there. Can you see on the EMA ribbon? The yellow line is starting to cross through the darker shades. That means the EMA ribbon's about to flip. When it flips, you get an even powerful move to the downside. That's what I'm looking forward for too. It means risk is starting to rotate back on. But keep in mind, guys, markets are still nervous. I don't want you guys to get super excited, because if we remember, markets are still nervous. If I head on over to the pre-market just to show you where we're at here, in terms of markets, you got the Nasdaq trying to rebound a little bit today, 0.6, 0.2 on the S&P, still unsure, and the Dow Jones is flat to slightly negative here. So again, we had good Netflix earnings yesterday, which should help the Nasdaq move, which is why we're seeing 0.63%, because Netflix tends to be a good bellwether for other tech stocks doing well. If tech stocks are doing well, I expect crypto to do well as well, because they're categorized in that risk on class, okay? So exciting times. We've managed to absorb that Genesis crisis for now. There are still woes in the market, which we need to get used to. This year's going to be like that, in my opinion. It's not going to be a binary bullish bearish year. It's going to be a lot of volatility, a lot of up and down. Data's going to come out, we're going to feel bullish. Data's going to come out, we feel bearish, right? Oh, we're heading into a recession. Oh, look, the GDP figure shows we're officially in a recession. All this stuff is going to play out through this year. For me, I'm categorizing this year as another year of accumulation, but not chasing green candles. We're going to get crazy little pumps this year, trust me, just like we got. And I'm not going to buy on those green days. When I see that capitulation comes in, when I see the red come in, that's when I want to be doing my DCAing. Hope you guys enjoyed this video. If you like it, smash up likes. Don't forget to subscribe. As always, check out the links in the description. ijaz.uk/TA. Learn technical analysis, head and shoulders pattern, EMA ribbon, all that good stuff, completely free. ijaz.uk/TA. Thanks for watching, guys. I'll see you in the next one.